Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about should you buy Lemonade stock in 2021. So I hope you guys enjoy it, and if you guys get anything in value, hit that like button and subscribe to the channel. If you guys have any questions or concerns, go ahead and ask them in the comments. And if you guys want to learn how to properly invest in the stock market, go ahead and check out my course, and you guys can use promo code dividends to get 50% off. So at least check it out. So now guys, let's jump into it. Roll that intro. Let's go. Come on. Bye. So now for those of you that don't know what Lemonade is, well, Lemonade is a mobile insurance company that offers a variety of insurances. They offer homeowners, renters, pet insurance, and what they target is millennials, and they have a mobile app that makes it very, very convenient for people to actually get their insurance. Because when I was actually purchasing this house, it was a big headache finding insurance companies, and I wish that there was a way where I could just go online, get the quote, and actually have it all in real time and not have to call insurance agents and all that other stuff that's a big headache. And that's what Lemonade really wipes out, is all those insurance agents, those phone calls, and it's very, very convenient. So their main customers are millennials. They get around one customer every second. So yes, the company is growing very, very fast. But what are some of the fundamentals that you guys need to understand for Lemonade? Well, looking at the revenue is actually growing at a pretty fast rate. The revenue is up around 28%, so that's pretty interesting too. And the thing that blows this out of the water is the gross profit. The gross profit is up 184%. This is why we've had so much buying pressure in the stock lately. You know, the stock really went from $60 all the way up to about $116 and then did sell off a little bit today. So there's a lot of momentum behind this company. So now the price to book is a little high, coming in at around 12.3. But as a growth investor, you can't really worry about stuff like that. You know, like I said before, when Amazon was trading for around $700 a share, they had a price to earnings at 700. And a lot of people at the time thought, oh my gosh, this is way overvalued. But now looking back, you'd have been almost foolish not to invest. And I have a very similar mindset with Lemonade. You may be paying a little more right now in hopes that the company continues to grow in the future. So now another thing that's really awesome about this company is they are 100% debt free. So there's no long-term debt. You know, if you compare this company to like Ford, yes, Ford may be a little larger company, but Ford has hundreds of billions of dollars in long-term debt that they're eventually going to have to pay off. And if you compare it to Lemonade, Lemonade doesn't have any long-term debt to worry about. So if the company actually goes through a rough patch, they can actually use the cash on hand, which is around $500 million, to get through that hard time. I do think that it's really sweet to actually see a company that is debt-free. Now, right now, yes, the company is not profitable, but when you're an investor, especially a growth investor, it's very, very common to actually see companies that are not profitable yet, you know, because we're hopefully getting in early, so when they become profitable, the stock continues to rally up more. You know, there's multiple stocks out there that aren't. You know, Tesla just became profitable last year. We have Pinterest that's not profitable. We have Snapchat that's not profitable, and a variety of other very, very popular stocks that you probably don't even know of. So now, yes, Lemonade is a pure growth stock. And with the growth stock, yes, it is very, very volatile. So it goes up and down at pretty rapid rates. So what is the best strategy to invest in Lemonade stock with little downside but huge upside potential? I'm sure you guys guessed it, dollar cost averaging. So really what you guys do is you guys figure out how much you want to invest. So if let's say you want to invest $1,000 in Lemonade stock, instead of investing one lump sum, because you could be pretty much buying at an overvalued point for the stock. And if you're somebody who doesn't like to see a lot of action in your portfolio, don't even do that. What you do is you figure out how much you want to invest. So that $1,000, you're not going to be putting $1,000 up front. You're going to be spreading out that monthly payment. So maybe you will invest, you know, $100 a week over the next 10 weeks. So you still invest that $1,000, but what it does is it gets a good average price for that 10 weeks. Or you can even do 10 months. You can do whatever you guys want. That's the strategy I'm doing, and I'm up right now around 165% on this stock alone. So I think that with dollar cost averaging, there's a huge upside potential, because if the stock continues to go up, you're going to be making money because the share price is going up in value. And if the stock is falling down, well, guess what? You're just averaging your price down, so when the stock recovers, you're going to be making a lot more money. Very, very little downside and huge upside potential. So now let's actually go ahead and look at the stock. Let's look at some support, some resistance, and kind of where I see it in the future. Let's go. Alrighty guys, so we have LMND. This is lemonade here. So if you guys want to look up the ticker, that is at LMND. So you guys can see that this is a pretty recent IPO. You guys can see it did have a little IPO breakout. Went from really $50 all the way up to about $100. Sold off and really just consolidated for a minute. We did have a breakdown of this 200 moving average line. Did find some overall new support at around 57. And then what happened is it really looked like it was using this 200 moving average line as resistance. So you guys can see it's hit it, consolidated, sell off, hit it, sell off, okay? So now it just kind of consolidated here, and then we got a break above it, fell down below, and then huge buying pressure in the stock here. So now you guys can see that really not even a couple weeks ago, this stock was trading at around $64 and then hit highs at $138 per share. So huge growth, huge momentum behind this here. So now you guys can see we did get that breakout of this old resistance that could now act as new support for this stock here. The reason why I say that is because if we go ahead and look and get a closer look at it, you guys can see it hit it and we got some sell off. And then once we got a really break above it, it curled back down and tapped that same line, and then we got buying pressure, okay? So now it came back up, pretty much came to that new resistance at 138, sold off here, got buying pressure, came back up, and then sold off back again. So now looking at this stock, what is a good opportunity to buy? So me personally, I think if you're gonna do that one lump sum investment, what you do is you're just going to set an alert here at around $100. I think $100 is going to be a very, very fair price for this stock here. Now, if you guys want to do dollar cost averaging, I think that could work extremely well too. It's just all up to you guys, how much you guys want to risk. Because if you guys do that one lump sum investment, of course, you guys are going to be risking a little more upfront in hopes of more of a long-term gain here. But I think if you guys want to go smart at it, I think investing that dollar cost averaging would be a perfect way. But you know, if you guys want to do that one lump sum, I would still look at around $100 per share for my price point. But if not, dollar cost average that thing all day long. So that is it. I hope you guys enjoyed the episode. And if you did, hit that like button and subscribe to the channel. If you guys have any questions, ask them in the comments, and we'll see you guys tomorrow. Take care, guys. Bam.